Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, November 30th, 2015. Before you see the SPY, and again, the SPY is the tracking ETF for the S&P 500. Notice today's action is slightly to the downside. In today's video, I want to go over this chart, project out for future moves on the S&P, kind of discuss what today's action means, and also go over a couple key stocks out there that I'm keeping a very close eye on. So right off the bat, the first thing you notice is the volume is very light today, as obviously it's the day following a holiday weekend. I hope everyone had a great Thanksgiving and a great weekend for the holiday as well. But notice again, the markets are trading slightly lower. For light volume, that is somewhat unusual and does pique my interest. We saw this last week as well. Last week, for the most part, the markets had a flat week, even though volume was ridiculously light. This tells me that, again, I'm expecting, more so than not, some weakness to come into the market. You might say, well, why do you think that? Well, you have to think about it like this. First of all, the charts are not showing relative strength right now. All right, spiders on a very light volume day, slightly lower. Okay, now they're not crashing, but obviously with the light volume, you're generally expecting neutral to upside. So the fact that we're down a little does to me make me a little bit more bearish than bullish, and more so neutral to bearish in the short term. All right, what I'm expecting is later this week, I expect more downside to start to come in with more volume. And again, I think the markets could come down quite substantially. Now, this is kind of contrarian to what the spiders are showing on the daily chart, because on the daily chart, you actually have a bullish consolidation pattern. All right, so again, look at this. This is the daily chart of the S&P 500 SPY. Look at this consolidation pattern is actually bullish. So what I'm actually projecting here is that you have potential for the markets to fail the bullish pattern, which is somewhat of a big deal. I mean, that's a big deal here. But again, think about it like this. All right, look at what we have this week. We have the ECB. You have the non-farm payrolls report, which again, all is going to play into what the Federal Reserve does. And again, I believe that trading into December 16th, which is when the Fed is going to tell us whether they're raising interest rates or not, I believe the market's going to be a little skittish. So I'm actually projecting out weakness over the next 2 weeks into that date. And then probably if we do pull back into that Fed announcement, you'll see a pop in the markets. So again, guys, where do I think we're going to pull back to? I have a target right now of approximately 203 to 204. So not a big pullback, about 5 points on the spiders, but nonetheless decent. And again, I believe it's going to start when this bullish pattern fails on the spiders. So watch over the next day or so, because based on time factors, based on time counts, based on the PPT methodology here at InTheMoneyStocks.com, this pattern is a bullish pattern. If it fails, you're going to get 5 points down very quickly, and then I think a lot of chop going into that Fed meeting, and then potentially a Christmas rally into the end of the year. Okay? All right. Another stock I wanted to just point out to you guys, another thing is SunEdison here. SunEdison is continuing to hold near the lows, down about 6.5% today. The key on SunEdison is this. First of all, the volume is getting very light. That tells us that a lot of the sellers are out of this position now. Okay, now it's still down today a little bit, but notice how it's holding this little area of support. If I flip to my intraday chart here, let me do that right now. Notice again, the low of the day was made early, then you popped back up, and now you're kind of just consolidating there. I think that SunEdison could test this gap fill right here, but from what I'm seeing is I'm seeing a lack of sellers now. Now, there's obviously still some left, but not like we were seeing in the last couple weeks. That's important, because ultimately that is the beginning of the end of the move down. And again, my projections are it probably does hold this $3 level right here. And again, this level right here, this gap fill is $3. And the thing is this, I will remain bullish on SunEdison as long as you do not take out this low down here at 255. I think it's really around 250. But as long as you hold up here, this is actually a big move up and an inside bar move. What you're then looking for is ideally gap fill holds, you start to move up. When you take out this high at 425, this thing literally within a day or two goes above $5. $5 is going to be the big level, guys, because that's the level that if it closes back above, a lot of hedge funds can then buy into it again. A lot of hedge funds have this rule where they say they won't hold stocks that are below $5, which is one of the reasons I believe the stock got pounded as much as it did when it broke $5. When it went below $5, I mean, it literally went straight down to 2.5. Look at it right here, guys. See this level? Here's your $5 level. What do you notice about $5? Notice how it was hammering on that so much, and it couldn't get back above, and then it collapsed down to 2.5. So basically what this is telling us is that if and when you move above this pivot, you're going to go right here, and this is going to be your big level. The $5 level will be your big level. Now, if it gets through $5, I mean, this has a lot of upside. Next big level is going to be just below 6, and then this could go back to $7.5, $8 very, very quickly. All right, especially with the short squeeze. I mean, if you think about how many shorts are in this position at this time, I mean, it is astronomical how many shorts are in here. In fact, let me go take a look right now and just bring up that information. But it's literally hundreds of millions of shorts. So, I mean, think about, even the volume today is not, I mean, it's 23 million, maybe it does 50 million today. I mean, this could be humongous. Yeah, looks like about 100 million shorts are in SunEdison right now. That's amazing, folks. So again, watch SunEdison very closely. The first level you're watching is gap fill at $3. If it gets through $3, the big level is this low right here, which is around the 255 level. If it breaks below that, that's trouble. As long as it holds that, I believe that ultimately you're going to trade above 425, which then takes you right away to $5. Then $5 will be the big level. All right, guys. Very intriguing. This is one of those stocks that fascinates me. I literally think, in terms of, I look at it like an options play, meaning that, sure, there's maybe a 10% chance that it goes out of business, right? Small chance, but a little chance nonetheless. Ultimately, the upside is back to $10 within 6 months. So, I mean, you're talking about 200% upside at least on this trade, in my opinion. Risk reward, I mean, for a small position, it's not bad, in my opinion, as long as you understand the risks. As long as you understand the risks. All right, guys. Enjoy. Come to InTheMoneyStocks.com, where we continue to dominate these markets with winning trade alerts. Join the Research Center. Join the Options Alerts. That's where it is, folks. Take care.